Kevin O'Leary, big question. Are we nearing the end of the sell-off? Can you trust what we're witnessing today with this bounce?
Yes, you can. I think we're in a classic garden variety correction, healthy. You know, people forget volatility. It's back. And as a result, we're going to have days like we've had in the last week or two. Obviously, tech sector really took it on the chin. But the thing that really matters is earnings and growth. And so, you know, I look at the earnings numbers and they're just blowing them out of the water. We're having a spectacular comeback here. The economy's on fire. I think we're getting growth in the back end of this year like we haven't seen since the 50s. And so, you know, I have to look at this as a buying opportunity, particularly in tech, where I look at the quarter-over-quarter growth in some of these names like Zoom that got slaughtered and say to myself, wait a second, nothing's changed. They're still growing like crazy. And all of those companies that, you know, people said, oh, the PE is too high, their growth hasn't slowed. The earnings are terrific. I think this is just a buying opportunity, and I think we're going to keep moving forward. What kills a market is real inflation, which we haven't seen yet, and slowing of earnings, which we definitely are not seeing. So I'm still full steam ahead. Equities rule, fixed income, nowhere to go. I think we're going to have a spectacular back end of this year.
So you gave me a lot to work with there, and I want to be clear here. You bought Zoom and DocuSign and Tencent and some of these other stocks that have gotten obliterated lately. Nobody is questioning the lack of growth. It's the question, Kevin, of too much growth. And the fact that inflation is picking up, that's undeniable. Look at all of the figures and the facts and what's happening in some commodities markets. Inflation is undoubtedly picking up. Isn't that a problem?
Well, this kind of reminds me, particularly on those names like a Zoom, the comments I used to get in the days of Amazon when it would correct 38%. It did it every 18 months. And people say, oh, it's over. There's no more growth, yada, 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 yada. When there's a secular trend occurring, like what's going on as we speak to each other right now on Zoom, and all these technologies that empower digitization, direct to consumer, which is growing margins and growing a brand new Digital America 2.0, that hasn't changed. We're in the third inning of that. So if you've got to be able to stomach a little volatility. We haven't had much lately. This is classic volatility. But I really go back to just looking at the quarter over quarter growth. Pick any growth stock. You know, I've given you three that I've doubled down on recently. But basically, nothing's changed. And so at the end of the day, if the market wants to value it differently by 40% and goes on sale, okay, I'll buy a little bit more. But tell me when the world stops growing. That's not the case right now.
Okay, so Josh Brown, I want to know from you whether you think that we can trust what we're seeing in the market today. But I want you to listen to what J.P. Morgan's Marko Kolanovic told us yesterday, a man who many people listen to, who's been known to move the market in the past. Here's what he told us about the sell-off, and then we can react on the other side. Here's Marko.
I think we're probably at the end of this upset. Again, you know, if you look at the Russell 2000, look at the Nasdaq, you know, they're now trading sort of below January levels, you know, and just think where we were in January. We didn't know about earnings, we didn't know about COVID, you know, and you know, why were nobody screaming back in January then? Like, so I think we're at the end of this upset. I think market is going to go higher here. That said, we do still, again, prefer sort of reflationary themes.
Okay, TRB, O'Leary's buying some of these hardest hit stocks. Kolanovic says it's overdone. We're probably at the end. Are they right?
Well, I would just say that if we think about this as there being two different markets, I would say that the punishment in the expensive/negative earnings group is not over yet. But what Marko is saying might be right for the areas of the market that have already been working. So I think, like, if you think about, I've been calling this environment Grandpa's Revenge. All of the stuff that the youths were involved with and posting things on Twitter like stay poor or kill yourself if you don't own Airbnb or whatever, like that's the stuff where I don't think the selling's over. And I think it's long overdue. And it's not because somebody should be punished for being bullish or anything like that, because I own a couple of these names that are in that cohort. I just feel as though the shareholder base for things like SPACs trading at premiums and all of these other type of high multiple names, the shareholder base is not a seasoned shareholder base. This is their first rodeo, literally. And there's nothing wrong with that. My first rodeo was getting demolished in the .com bubble 21 years ago. but I don't think that there's been as much punishment there as there could be. So I'm looking at some of the worst stuff. Like, let's take SPCE. This is the space ETF. Mm-hmm. It's 75% off its high. Everything you think about the holdings in that ETF could be true. All of your wildest dreams and all the things that you're imagining about Mars and colonizing the galaxy, all of those things could be real, and this 75% sell-off could still make sense and be justified. And that is the difference between the stock market and the real economy. So I think when you look at ARK, opened up 1.5%, now it's down 1.5%. Tesla opened up 2%, now it's down 2%. You cannot trust these opening bounces when you're in a downtrend. So I would put those stocks in one category. Now look at the banks. They got back everything they lost yesterday. Mm-hmm. That's Grandpa's revenge. Mm-hmm. Grandpa he's not fired up about space, but XLI gained back everything it lost yesterday. Materials, everything, transports. Look at the IYT. So that's what's happening in this market, and I think that this trend can persist for a while. Well,